Ever wondered where the idea of owning part of a company started? Let's go back in time to the birth of stocks. In ancient Rome, there were companies called publicani that contracted public services. Citizens could buy parties, shares in those companies, and their value would rise or fall. Fast forward, in 1602, the Dutch East India Company issued the first tradable shares in Amsterdam. People could buy and sell parts of the company. Why do this? Because companies needed capital money to grow, build ships, hire workers, open new trade routes. By selling shares, they could spread risk. Many people support one big venture. Meanwhile, buyers got a chance to earn profit when the company did well. That's the same system we use today when we talk about stocks. Owning a share in a company means you own a fraction of that business. When you buy stocks in Jamaica or anywhere, you're joining a centuries-old tradition of growth, risk, and shared opportunity. So the next time you hear stock market, remember it began with simple shared ownership a long time ago. Follow Alpha and Facts and subscribe on YouTube for real money history you didn't learn in school, because knowing where stocks came from helps you make better decisions today.